Uber is a classic two-sided marketplace. It connects drivers to riders through its app. For each ride, a portion goes to the driver and the rest goes to Uber. But since its inception, Uber's costs have far outweighed the revenue it brings in. There's taxes, payment fees, insurance, driver and rider incentives, and other operating costs. In 2018, Uber actually lost $1.8 billion. In the 2 years prior, it burned through nearly $5 billion. Uber is also pouring money into expansion across the globe. Though it sold its Russia, Southeast Asia, and China businesses to cut costs in regions where they faced intense local competition. And it's investing in moonshot projects like e-bikes and scooters, self-driving cars, trucking, even flying taxis. Ultimately, Uber wants a piece of every passenger and public transportation mile traveled globally, what it calls a $5.7 trillion market opportunity.
Dierdre is here with me now alongside Atish Davda, who is the CEO of EquityZen, a marketplace for trading pre-IPO shares of privately held companies like Uber. Welcome, guys. Dierdre, on their losses, as I heard someone was saying earlier, one of the biggest IPOs we've had in years, and a company losing the most money in terms of an IPO candidate that we've seen in a long time.
That's exactly it. It is going to be the #1 company with the most losses to go public that we have ever seen. And Renaissance Capital did a really interesting comparison that looked at money-losing companies when they go public and how they've performed since then. I think out of 10 or 11 or 12, there was only a few that were actually up since then. So the amount of losses, too, is just so enormous that investors, as we've seen with Lyft, are having a hard time getting their heads around it. So not only is it losing a lot of money, too, as we just kind of showed you how in that package, but its growth is slowing, too. So they're paying more for slower growth.
And we know the range, Atish, that they're talking about is originally it was 44 to 50. We're hearing maybe 47 or a little bit lower.
Yeah.
Would that leave most people underwater who are in the private markets right now?
Yeah, so not speaking to any specific transaction, we've seen the secondary market trades occur between $50 and $70 for Uber. So if any of those trades that took place recently in the last few months, those guys are going to be underwater right out of the gates. But I believe that Uber is pricing itself to be very distinct and different from Lyft, and hopefully for the final time say, we are not the same company. We're 5 times larger. We're in 56 more countries than Lyft is in. And by the way, on the day of our IPO, we're going to go this way, not this way. I think that's what they're trying to do. Let's see how it goes tomorrow.
The interesting thing is, in Dierdre, they were kind of leaving money on the table in terms of the equity raise in order to have this better effect once it trades. But they need capital. I mean, one of the things that we've seen other startups doing lately is these direct listings where they don't actually have to raise any money. I think Airbnb, some of the examples, Slack even. Uber needs this capital.
Those companies are very well capitalized. And actually, if you look at Uber's cash pile, it is too. The problem is that it's burning through billions of dollars a year. So that doesn't last very long. So you're right. They need to raise, somewhere between $8 and $10 billion tomorrow. But now the circumstances have really changed, and we've been reporting on this. You've seen the market volatility this week. I know Lyft is up a little bit today, but it has been a very rough ride to market. So I'm not sure. I think it'll be interesting to see what happens, but I'm not, from what we're seeing and what we're hearing, it's not certain that it's going to be a pop tomorrow.
Not just that, but Atish, so as Leslie Picker was reporting, a deal that's anything under 9 times covered is a cold deal. It sounds like Uber is nowhere close to that, even with the pricing where it is right now. So it does make you wonder just how scared people are of having exposure.
Well, there's a couple things going on. Number one is that this week in particular, you've seen all the trade talks, and that's added a little bit of volatility to it. Volatility is the antidote to a good IPO. If there's any companies that are going to have successful IPOs, they're going to be large battleships, and Uber certainly is one of those, and it's not the minnows. The one thing Uber has going for itself that we haven't seen in any IPO in the last long while is that it's absolutely massive. I mean, you're talking about a company that's generated $11 billion in revenue.
But I'm surprised you think all of this is a good thing. To me, it's like, give me a small startup that at least has some I mean, look at Beyond Meat, right? Like, that's the example of a company that hit the markets incredibly well, and they're the opposite of everything that Uber is.
Or Zoom. I just want to point out that, in the private markets, which is where these large companies that are now, almost teenagers have been operating, you take a look at a company like WeWork. I mean, you read about WeWork, and it's nothing but rainbows and sunshine.
Oh no!
When you listen to people talk about it, that's when you really find out that That's, there's a lot more going on under the covers over there. They're losing more money than they made in revenue.
Right,
yeah,
but if Uber's saying, Dierdre, we're not WeWork, that's not exactly the greatest pitch to go public.
And WeWork's losing a little bit more money than Uber, but their losses are around the same. And WeWork isn't depending on some sort of autonomous driving that may never be commercially viable, right? Like Uber is.
Last word.
I think if you just take a look at Uber's valuation at the midpoint, at the $47 you're talking about, if you just take a look at the three things that it's going for us, the ride-sharing market alone, if you take a look at Lyft's comparables, around $70 billion. The Uber Eats, according to EquityZen's research, is about $10 billion. That already puts you in the game, and then you have the scale of being in 56 countries with around $4.5 trillion.
The problem is that costs a lot of money.
That's right. It's going to cost a lot of money.
This is the road show. This is like a small look at what's happening around that in that boardroom.